CNBC TV18, celebrating 15 years of leadership.
Welcome back. You're still watching Street Signs at the end of a week which did inject some degree of global volatility into our markets. Nirmal Jain has been speaking to us. He remains, and we'll get back to him soon. But before that, let's get a word in from Vineet Bhatnagar, who's also joined in on the derivatives picture for January. Vineet, good to see you after a long time. What's the sense you're getting from the foreign investor side first, from the kind of positions that they've been taking on Nifty futures? Does it appear that the correction which started last week or this week has come to an end, or is it inconclusive?
I guess, what we saw at the time of the December rollover, where most of the long positions were rolled over by the FIIs. Since then, what we have seen is that on the Nifty index future side, they have reduced their long positions by as much as 1/3 in the last 7 trading sessions alone. So something which was about a $1.8 billion is now standing at about $1.2 billion in notional value as of end of today. Similarly, what we have also seen is that the protection that they have taken by way of Nifty options has increased to about $2 billion, and it is distributed over 8,100 Nifty strikes. Combine it with the fact that the underlying cash market behavior for these FIIs have been one where they have liquidated their positions. They have taken out as much as about $250 million in the last few trading sessions, is indicative of the fact that not only have they reduced the position, but more importantly, in the last 2 trading sessions, whatever recovery that we saw in the market on Thursday and a bit of it today has only been a point where they have gotten out of their some of the long positions. So that's the trend that we are seeing in the market right now.
Okay, Vineet, hi, welcome to the show. In the week gone by, the Bank Nifty fell 2%, and a lot of heavyweights like PNB, ICICI, SBI were all down 5 to 7%. Is this a good buying opportunity, or do you think you'll get better levels in the near future?
I think it is, of course, related to how the overall market behaves over the next 2 weeks. So I guess I would not like to, carve out only a strategy for the bank stocks. It needs to be seen in totality whether there will be an overall pressure on the market or not. Having said that, if the market was to remain supportive, and as Nirmal was saying earlier, 8,000 or 8,100 is supported strongly over the next week or so, then there may be some selective opportunities to pick up a few PSU banks, and more importantly some of the private banks as well.
All right,
more again from the point of view of the long-term investors as against positional traders.
Okay, fair enough. Nirmal, what's the sense you're getting about how one should approach Infosys now post its numbers?
I think Infosys has maintained the guidance at 7 to 9%, which was better than street expectations. But in the IT sector, I would think that there are better values maybe in stocks like Mindtree and Tech Mahindra from a medium-term perspective. But if you have a larger basket, then you can include Infosys as well.
Nirmal, do you sense that there will be a pre-budget rally this time around in February, or does it depend on the global event more importantly? But do you think these local events like budget and the interest rate cut are probably February or even March phenomenons from a market trigger point of view?
I think there will be a pre-budget rally, because what government will do is, they seem determined. So there have been quite a few ordinances, and if they are able to do coal block auctions and like spectrum auction, which is planned before the budget, I think then people expectations from budget will soar higher, and people start. I think there can be a pre-budget rally. I would very strongly expect that there should be one.
Vineet, what did you see for the two big stocks of this week, HUL and Infosys, in the kind of position building that happened towards the end of the week, and where it has left these two stocks going into next week?
I think from the point of view of the way the positions for Infosys were, and lot of prop trading houses as also, positional traders were taking position in the Infosys options. The price movement on Infosys today really came as a surprise. I think I was looking at a few of the payoffs based on the strategies that people were putting in the market over the last 2 days, and the general consensus was that the price should not move beyond 2.5% up or down, and therefore what we saw at the time of closing today for Infosys to have closed 5% above yesterday's close has definitely been a surprise, and I do not think that many of the option positions that were opened ahead of the Infosys results could have yielded any handsome profits at all. Going forward, I think there will be some assessment of how Infosys will behave in terms of the next 2 quarters, and I subscribe to the fact that there are other stocks in the IT sector pack which perhaps will stand out more strongly than Infosys, and Tech Mahindra in that respect is one of our top picks.
Okay, so Tech Mahindra is your top pick in the IT space. Nirmal, how does a retail investor approach this market now? If it still is a buy on dips market, then what should you be looking at buying now?
So I think retail investors should approach this market with buying and increasing their asset allocation to equities. And a typical retail investor will be better off buying mutual funds. But in case you want to build a portfolio of direct equities, then I would say you should have private banks. I think the valuations are still, they have room to further improvement, and given the fact that interest rate should go down by at least 100 basis points in this year. So private bank would be top pick, and then followed by pharma, IT, cement, and maybe select industrials also.
All right, so that's how the allocation should be. How do you approach names like ONGC?
I must add auto sector as well, because auto also is looking good.
Sure. Yes, it is. In fact, stocks like TVS, Ashok Leyland are hitting new highs every day. Just wanted to ask you about the oil and gas space, Nirmal, because, there was news on Friday that ONGC may be exempt from subsidy payment for the rest of the fiscal, and that stock has been spiking up. What would you do with this sector now?
So in oil and gas, it's not an easy call, but if the crude oil prices remain low for some time, then obviously exploration companies like ONGC, they do not benefit. But in Indian, the conditions are very different because of subsidy burden and the delayed payments and the interest cost and things like that. But still, I would say in this quarter, most of the companies will have very heavy inventory losses, even OMCs like BPCL and HPCL. So I would say that wait for results for this quarter, and also wait for oil prices globally to stabilize and find some level which can sustain. But if one has to buy, then I still prefer oil marketing companies and not ONGC as such.
Vineet, what's the data suggesting in terms of the range for the January series for the index now?
Okay, so if you look at the call distribution as far as Nifty is concerned, there's the highest concentration at 8,400 call strike for Nifty. Therefore, our estimate is that there is a resistance that is visible at about 8,360, and which of course is something that will result in the entire decline that we saw this particular week. This is where the Nifty was on Monday when we started off. And separately, I think the other resistance that we are quite interestingly looking at is 8,600. Of course, for that to come about, it is important that the global events, or the turn of global events that are expected to happen in the last week and the third week of this month are supportive. Our present estimate is that the January expiry should be a strong expiry as far as Nifty is concerned.
Nirmal, you spoke about skewing asset allocation towards equity. How about fixed income investing in 2015? If interest rates were to come down, then some of the longer duration government security funds should also be able to generate some capital appreciation. Is that not?
No, most certainly. In fact, so it will depend on the size of the portfolio, and fixed income should do well. So this is 1 year where your allocation to physical assets like real estate and gold should go down to minimum. and incrementally all your money should go into equity followed by fixed income. So in fixed income, if interest rates go down by 100 basis point, then you may have say capital gains of around 5%, and on top of that you have 8-9% of interest yield. But the advantage in equity is that your tax structure is very benign, because if you hold it for 1 year, it becomes almost tax free. So post tax, your returns in equities will still be much better, even adjusting for risk. But having said this, if you are an HNI investor, then of course fixed income and equities both should give very good returns, and you can allocate assets to both these asset classes.
Vineet, even amidst this volatility, bulls are finding a lot of value in individual stocks. I mean, you can see it in names like Maruti, Kotak, Asian Paints, HUL. All these stocks are hitting fresh highs every day. You spoke about Tech Mahindra that you like. Any other stocks that you would recommend to buy into, either from the Nifty or from the broader markets now?
Yes, I think if we were to start looking at which other sectors that will continue to look strong, if the global cues are not damaging or at best supportive of the domestic situation, then names do crop up in sectors like autos, and that is where we will pick up a Maruti and M&M. Names do look good in cement, which is where we will pick up an Ultratech, and also small caps like Prism. We will be interested in FMCG, and that is where we will pick up names like even Imami, or we will pick up Pidilite. So there are host of names, a combination of both the large caps as well as mid cap stocks that are looking quite attractive. The moment we start factoring in the fact that the domestic story is going to play out, if not for the whole quarter, but at least pre-budget.
All right. On that note, Nirmal and Vineet, thank you so much for joining us and giving us your views. So as you heard, despite the global volatility, there's quite a bit of optimism as far as the local macro story is concerned, and there's still plenty of value buying, especially in the large cap names. But on that note, we'll wrap up with this edition of Street Science. Thanks so much for watching.
CNBC TV 18, celebrating 15 years of leadership.